Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. Hey everybody, welcome back to the show. It's been a couple days that we last touched base together, but it is now Monday and I'm excited to be here and excited about all the news that is coming out across the news desk, the newswire, and inside all of our Reddit feeds and Twitter feeds, I suppose. Checking in for a second, I've been having, I suppose, in some ways, a difficult past couple weeks. Just there's a lot that I'm juggling. There's a lot that I'm maintaining. And in addition to all that, my mind is just racing a million miles an hour. And there's several different projects that I'm involved in that I'm just really excited about. But between my personal life and my professional life, working a couple jobs, and just really neck deep in life and reality, it's difficult to bring daily attention to everything that I want to bring daily attention to. I really want to take this opportunity and bring this opportunity to bring everyone this information full time. But right now that's extremely difficult, as everyone out there can probably imagine. But with that being said, I'm at a point where I'm going to be looking for support from you, from the community, if you're interested in me delivering more of this information more consistently and with more force as well. If I could become independent fully, if I could have the financial backing to do this with 100% of my time, then I could actually purchase the equipment that I need to do editing, and I can have the time that I need to do the research and to set up all sorts of really interesting pieces of content for you and for the world through this Minting Coins channel. We can start to define what does it even mean to be minting coins and for all of us to be minting coins together. There's just a lot of information in there. I think that overall, with everything that I have going on, I want to share it with you. I want to tell you about it, but at the same time, I want to keep this channel focused on the Bitcoin, focused on blockchain technology, focused on what's happening in terms of decentralization and open source technology that's going to allow you to live a richer, freer, more open life yourself. And so with that being said, I think what I'm going to be doing is creating more blogs, creating more personal blogs, personal video blogs, and then posting those to the members community at mintingcoins.com. And so if you're interested in supporting me and supporting this community and supporting this channel, then take a look at our website at mintingcoins.com. Send me a message. Let me know, what do you think about the website? How can we make that website a paid community where people can have my time, where we can have each other's time, where we can get ask questions and get answers, and not like these communities on these free communities where in these free communities like what is on YouTube, where it's just filled with so many trolls. If we just pay a little bit into something, then we can get a lot more quality out of that. And in terms of what you're getting and some of the quality, it's my time of being able to focus on helping all the different people with a little bit that I can do in this world, because when it all comes down to it, I'm probably in the same position that you're in, just looking into this a little bit sooner than you. And so we want to bring as many people up to speed as possible, make all of us understand what is happening, what is going on. And part of that is this with this show. So without further ado, why don't we take a look at the market, take a peek at the news, and let's discuss. Okay, so starting over here at coinmarketcap.com, taking a look at where we are with all the cryptocurrencies in the world, we have jumped up quite a bit since we last touched base. We are over 1,129 different cryptocurrencies with a total market capitalization of all these cryptocurrencies over $136 billion. The past 24 hours, we've had a lower trading volume than what we were experiencing when the market cap was about $20 billion higher. And so in the past 24 hours, the trading has only been about $3 billion. And our Bitcoin dominance is still relatively very high, 47.7%. Bitcoin is very strong, respectively, compared to all these other different cryptocurrencies. And taking a peek at these, we have Ethereum over here, 292. If you want to have 1,000 of those for the proof of stake staking, you're going to need $292,000. We have Litecoin Dash. With they're having a conference right now, releasing a lot of new information coming out of Dash. Currently $345 per token. And then we're having some relatively big jumps with Neo and Omise. We're going to be talking about Omise later on in this video. And then Neo 2 is also just having a lot of information come out, a lot of pumping coming out, just like Omise is. And with that, there's just a lot of excitement. This is sort of, there's been this huge storm rocking the space with the China news and with the JP Morgan, Jamie Dimon news. And there's all of this FUD. We just need to do the opposite. When there's danger, we need to run to it. When there's a party, we need to consider walking away from it. And you know, the prices sort of crashed with all that bad news, and then I guess we can say that they've been stabilizing. And you know, and I would say this is sort of a calm before the storm. These past few months, we're expecting a lot of developments come out, developments from Dash, developments from Ethereum, developments from Ethereum Classic, developments from Bitcoin, and atomic swaps on the Lightning Network, or all of these different blockchain technologies. Omise releasing their SDK in the Q4 2017, just a couple of months here. And once all of this hits out and then we roll past the holidays, just like we did see last year, and that big jump, that big spike after going in through December and into January, I would think that we're going to see another big spike pop out again this January when we get to that month. So turning over to Reddit and taking a look at the information we have over here. I thought this was a really interesting image. You know, we've been talking about how or at least we, you know, on Twitter and Reddit, there's some tweets and information going around where, what was it saying? It was saying that the post office probably thought email was a scam because there was no stamps and it wasn't physical, and how could that possibly be real? And here we have this meme: when the printing press was invented in the 1400s, the government was losing control, and the government required approval to print anything. And so Bitcoin was invented in 2009, and since 2009 we've been in a situation where the government is seeking to control Bitcoin, where the government is seeking to make all these rules about Bitcoin. And it's not just any one country, it's a series of countries, one after the other, that is just bad news after bad news after bad news, that is just adding to the volatility of the price of Bitcoin and cryptocurrencies going up and then going down. And so just like we had with the printing press and the ability to share information and to, you know, the potential to decentralize information, the government wanted to control that, just like the government wants to control Bitcoin. And yeah, a lot of similarities for us to keep in mind. And so with everything that's going on, you know, with the coins dropping, with the coins pumping up, with the coins you know, falling off, just keep in mind that when everything's low, that's when you want to buy. When you see something fall off a cliff, that's typically when you want to consider buying. Now, this is not investment advice. This is not an investment channel. This isn't even a trading channel. This is just an information channel. But so much of the time, the prices are very high. There's something in the news. People are talking about it. And when people are talking about it, then everyone else is going out and buying it. Well, that's not necessarily the best time to buy when it's very high. It's best to sell when it's high or to hold when it's high in the case of cryptocurrencies and Bitcoin, because we're so early in the game of what's going to be happening and everything that's going to be coming out. So, excellent. And so just keep that in mind. Just keep in mind when no one's talking about the coin, when you're looking at it over at coinmarketcap.com and you see that there's, some coins that aren't doing as well, or a coin hasn't pumped in a while, that might be something that's more interesting to look at than maybe a coin that's had a dramatic pump up, very recently, because it's probably going to, in the case of like NEO, because it could, drop again. Just have some caution out there. Also on Google, we've been seeing some Bittrex phishing sites popping up, and so these are popping up at the very top of Google and some paid ads. And you just need to be really careful about what ads you click on and which links you click on, and there's going to be more and more of these scams coming up and being sent out into the world. And so just be extremely careful. Bookmark the sites that you know are good sites. Use the two-factor authentication on your smartphone using the Google Authenticator app, and just be really careful out there. In other news, over in Europe, with all this FUD that has been coming out and all this negative news coming out for Bitcoin and blockchain technology, we have the president of the European Central Bank who is speaking Monday with members of the Committee on the Economic and Monetary Affairs at the European Parliament. And so in terms of the European Parliament, the president here of this European Central Bank was saying that it's not in their power to prohibit or to regulate digital currencies such as Bitcoin. And it's still premature to consider digital currencies as a means of payment for the future. So it's really interesting that he says on one hand that he can't regulate these cryptocurrencies, but on the other hand, it's still premature to consider these as a payment. And if you read a little bit deeper into this article, he just goes on to say that he doesn't mind the transparency and the disclosing of information, but he doesn't want to set off the rate setters, because the rate setters could turn the markets against them to make people do a run against them, which is essentially a run against the bank, a run against the euro in their case, just as the banks here don't want a run against the dollar. And so on one hand, they're saying we can't regulate it, but on the other hand, even though they know it's the future of payment, they don't want to say that because it would essentially crash the dollar. And so they're not giving people necessarily the best information, because their goal isn't to give people the best information. Their goal is to maintain the market stability. And so to maintain the market stability, they couldn't possibly say what it is that we all know, because it would just add to the narrative that not only is fiat hurting people economically, but it has no benefits over that of this new digital payment, decentralized blockchain technology. And banks know this all across the world. Turning over to this article over here at cointelegraph.com, we see that the government debt is getting downgraded. There's so much debt going around with all these different governments that their debt and their credit rating is being downgraded. But on the other hand, we have Bitcoin, and we know Bitcoin is backed by math. And so we have Bitcoin, or we have Britain, being downgraded. And so we have Moody's downgrading the credit rating of the United Kingdom from a AA1 to a AA2 just this week actually. citing weakening public finances and calling into question all sorts of plans that the government has going on. And so the pound sterling, they're slowly recovering from their downgrade that they had before last year in 2016. And this is all stemming from its first downgrade in 2013. The downgrade of Britain's sterling pound in 2013 was just a couple of years after when the U.S. credit rating was downgraded in 2011 by the S&P from a AAA to a AA plus. And so that was a big deal. That was a big deal that the world didn't have the full faith and credit in the United States government in 2011 when we were downgraded. And that's really interesting because the United States dollar is backed by the full faith and credit of the United States government. But it's just a very difficult position for the United States when the United States has $20 trillion in national debt. And so the country's creditworthiness likely isn't improving anytime soon for the United States. And so it's not great in Britain, it's not great in the United States, it's not great in China. We have China being downgraded from a AA negative to A positive, A plus credit rating score. The plus sounds good, but they lost that extra A. And this is because of the prolonged credit growth and how much credit that's been increasing, adding to its economic and financial risk across the world. And this is trillions and trillions of dollars of debt in China, on top of the trillions and trillions of dollars of debt in the United States, on top of the debt that's happening everywhere. And so while all this is happening, while all these dollars have so much debt, while all the credit worthiness of all these fiat countries are being downgraded, and all these different countries have so much fiat debt, there's no debt in the world of Bitcoin and blockchain technology. There's no backing of any one company, organization, institution in the creation and accounting of the Bitcoin blockchain. Because the Bitcoin blockchain is backed by the mathematics, the cryptography, the proof of work mining that costs the electricity and costs time, and we have an increasing amount of specialized equipment, increasing the hash power for the Bitcoin mining that is increasing the network security, that is increasing the full faith and credit of Bitcoin, and helping people realize that Bitcoin is a more stable monetary alternative for people's finances. And so the writing's on the wall. We're just seeing this up and down the board across, in the past couple of decades, we've seen it across third world countries and maybe second world countries, but it's now in this decade, a few years before 2020, that we're seeing these signs, these preemptive signs of the currency and the country's ability to pay being downgraded from first world major economic powers, pillars of strength and the world order, that are just having this instability in their ability to pay their debt. And if any one of these countries continues that instability of not being able to pay their debt, then no one's going to want that country's currency. That currency is going to be less desired. People are going to trade that currency for other things, let it be another country's currency or gold or stocks or bonds or cryptocurrencies, Bitcoin maybe. And then when that happens, people in that country are going to experience inflation and then hyperinflation, and then the cost of milk. The cost of milk might stay the same relatively, but in terms of that country's fiat dollars, it's going to go up dramatically because the value of that money is going to be less strong. And so when that happens, we've seen from other articles, how do we know that they want to fix this? How do we know? What do we know is their plan to fix this information? And so we know that their plan is to move to a cashless society. We know that their plan is to to embrace the digital payment technology, to make the large bills illegal, to make the $100 bills, the 500 euro notes illegal, to move to Visa, MasterCard digital payment technology so people can't take all their money out of the bank, and then just force people to continue, trading in this, the currency which would then be crashing in that possible scenario. It's a fine line sometimes between the possibility of sharing information that is fearful, but we do need to base the information that we're sharing, that we're taking in, on the facts. And the facts of the matter are that the credit worthy of these major countries is not very strong. And China, not China, but Japan's in this list too. And Japan has seen multiple rate cuts over the past 8 years. It's currently rated a A1 or A plus by Moody's. And, where China is about to be dropped down to, except China's a Goliath compared to Japan. But in Japan, even though we've seen the full adoption of Bitcoin, and every merchant and person is allowed to trade and barter and using Bitcoin, the Japanese Bitcoin exchanges are soon going to be going full surveillance soon, starting in October. And so we know that the Chinese regulatory authorities have been cracking down on Bitcoin trading and ICOs and the like across China. And now Japan's Financial Services Agency has announced that they're going to begin to closely monitor the cryptocurrency exchanges in Japan. And this is really interesting because Japan has become the largest Bitcoin exchange market with over 50% of the market share of the global Bitcoin exchange market. So much Bitcoin trading is happening through Japan. And so the Japanese regulatory authorities just realized that with great responsibility and with great power comes the great responsibility. And so now that they've allowed and essentially legalized Bitcoin in their country, now they do need to add on some layers of regulation to pursue and both market fostering and regulatory enforcement to, as they quote here, to aim for sound market development. And so there's going to be a lot more regulation. There's going to be a lot more acceptance of Bitcoin, and so it's going to be a little bit of a back and forth. We know that this is unstoppable, but at the same time that it's unstoppable, we know that the nations of this world also want to control the floodgates of how intensely people in the world move over to Bitcoin from that nation's fiat. Because if everybody does it all at once, then that could cause an economic collapse. But if people do it slowly, I'm not saying that they want people to do it at all, but if they just realize if people are going to do it, if they do it slowly, that's going to be less likely to cause an instantaneous crash of the world economy. And so with what Japan is doing, going through these exchanges to closely monitor these exchanges, to put these exchanges under full surveillance, full AML, KYC, anti-money laundering laws, know your customer laws, regulations, not just with the rules that apply to the nation of Japan, but the rules that apply to the global financial system that each of the intermediaries demand that the other parties inside this existing financial ecosystem play a part of. And this is going to be sending people away from these centralized exchanges, and it's going to be sending people to decentralized exchanges. A lot of these decentralized exchanges are going to be based around atomic swaps. I don't have it here right now, but Charlie Lee of Litecoin has been doing all sorts of atomic swapping Decred and Litecoin and Bitcoin, and might be some other coins in there. And this atomic swapping is just instantaneously letting you send and convert one cryptocurrency for another. Let that be for yourself or for a transaction where you have one cryptocurrency and you want to send it in, but the receiver, the seller of the item that you want to buy, they accept a different cryptocurrency than what you have. So this exchange is going to happen instantaneous on the blockchain with this new technology that is being developed. Well, not only is that a thing, but this is also being developed using other technologies, other networks, and one of these is Omise. And Omise is the soon-to-be released technology coming out into Q4 2017 with the Omise SDK, which will be an open source blockchain technology leveraged off the Ethereum blockchain. You following me here yet? So we have the Ethereum blockchain, and off the Ethereum blockchain, we're going to have Omise. And Omise is going to be open source, decentralized, and allow everyone to take the Omise SDK and to create a wallet. You're going to be able to create a wallet for any business, any company, any corporation, and that wallet will work seamlessly with any other wallet that's created with that SDK and that different technology. And so this is just amazing because, you know, if this technology sort of existed for you as a person, and then you went over to use an Uber, for example, and then you have a rating on the Uber. Well, right now Uber and Lyft are two separate databases and two separate companies, and so your rating isn't porting over from one company to the other company. But in this scenario, with a single company, with a single SDK, everyone can have their own different wallets, and these wallets are going to play nice with each other. And that's going to create an amazing, fluid, seamless, and secure experience, which is going to facilitate how quickly transactions happen, and it's going to facilitate the ease of use and the association with the brand when it's a very easy, very smooth, very flawless transaction. It's going to give you a good feeling and a good experience with that company, as opposed to fidgeting around and having to go through lots of different screens. And in this case, what we have here in this news is some news that got kicked up today. With the Omise partners with McDonald's Thailand to provide seamless payment experience for online and mobile orders. And so we have the Omise team over here with the McDonald's Thailand team over here. And we have a couple quotes here where they say, "We continue to raise the bar for our customers with the convenience for web and mobile ordering as Omise consolidates the payments by all card issuers with ease," says the chairman and executive committee and chief executive of McThai Co. Ltd. And so with Omise, McDonald's Thailand has revamped their checkout journey for their customers, making the process simple, fast, convenient. And what this means is that, you know, through this white labeled payment system, the transactions for the entire order and the purchase experience is kept on site. And then there's not all these extra pages, extra page redirects, extra time for people who have to wait or for things to go wrong. And so the consumer's experience begins right when they take place from the order online, and the payment is a critical component of that experience. This is a quote here from June, who's the CEO of Omise, and Omise Go. Or Omise is the company, I suppose, that's creating Omise Go, the network. And so June goes on to say, offering highly secure, seamless payment options across all platforms and devices is key to delivering a seamless experience for McDonald's customers. And so the seamless checkout process, which increases conversion rates for business, increases the brand association, the brand identity, and the lifetime value that these businesses are getting from being able to be very, very attentive to their customers' needs and their customers' experience when they're purchasing products or services through them. And so a couple tweets over here. We have this first one from June at Omise. And so today we got confirmed our relationship. It was a very good strategic conversation with the CEO of McD Thailand for more collaboration. And so this news was originally in August 30th. And then we have this other tweet that just came out today. And this tweet is says, "Good to see real McDonald's transaction through our Omise payment platform." And you can see right here, we got some information blurred out with the information, the transaction, the dates, the receipt, the amount of money being debited, and there that information is right there. So that's all really, really interesting. It's just really, really interesting to understand that the cryptocurrencies bring a lot of risk. The cryptocurrencies bring a lot of potential, that cryptocurrencies are really in a beneficial position to support the world global financial markets, as we see so much credit issues with so much debt from the largest nations in the world. And at the same time, things are happening so quickly, information is coming out so quickly, and the development of the technology is happening even quicker than the information can be provided. And so already, not only do we have so much growth inside the Bitcoin and blockchain technology space, but in addition to that, we see how these next level, secondary level, next generation add-ons are very, very quickly transforming the space for in response to what's happening in the world, just like we're seeing with these decentralized exchanges, just like we see what's happening with these atomic swaps, just like we see what's happening with decentralized exchanges like Omise Go, or what we're seeing with the Kyber network. There's a lot happening, and it's really exciting. It's really, really interesting. I really hope that more people get this information. I really hope that more people start paying attention, and that's the goal of what it is that we're doing, and that what we're doing with this channel, to just talk about things, to kick up a conversation. Even if we reach a certain group of people, as long as you take this information and you share this information with some of the people that then the ripple effect that we're going for is definitely going to be taking place here. And with that being said, we're looking to really continue this and to really be here for the long term. And to do that, we're looking for your support. So, tap that like button, leave your comments or your questions in the comment box below. And also check us out on mintingcoins.com. Check us out on SteemIt. Consider being part of our little community over here in this part of the internet, and being part of us for the long-term journey, as so much more happens, as so much more comes out, and so much more is taking place to disrupt everyone's life across the world. So with that being said, thanks again for sticking around. Tap that like button. We appreciate your support in every way possible. Until next time, I'm glad that together we're minting coins.